Today we'll be diving into tariffs day one. What kind of impact is it going to have on crypto? We'll break it down for you. My name is Paul Barron. Welcome back into Tech Path. Let's get started. I do want to thank our sponsor, Coinbase. It's going to give you up to $200 in crypto. You guys can go out there and get ETH, Bitcoin, a ton of altcoins, all available over on the Coinbase platform. Check it out. All right, let's go over to a couple of points I want to hit on. First is a massive tariff on millions of Americans now, of course, is in effect. Purchase just went into effect, and of course, this could cue the chaos. Obviously, a lot happening right now, potentially more than doubling the cost for a lot of the cheap products coming out of places like Temu and areas like that, mostly, of course, in China, that Americans are looking to scoop up or have been, maybe not so much anymore. More than 80% of total U.S. e-commerce shipments right now in 2022 were de minimis imports. So I don't know what the 23 and 4 data was, but interesting, that went all back to 22. CBP said 1.36 billion packages came to the United States, so clearly we are a destination hub. And many people are saying, now I can't afford to buy from Temu and couldn't afford to buy in this country already. So it is becoming even more so. The kind of impact this may have on the Chinese market is interesting. So I don't know that we're going to get confident data out of China. This, of course, is a Temu fulfillment center, I guess. Doesn't look too busy. Other things that are happening is prices are going up right here. If you look at the Xbox, people are pushing back on this one, even though you can get all of these devices over on eBay for a lot cheaper right now, but maybe a little bit more expensive. Point is all these are old devices, and yet the price is going up. Obvious reasons because of the tariffs. I think Xbox is going to be in a little bit of a pain, along with many device manufacturers out there, maybe through the summer as we start to see more and more pressure going into the market. Here was a company called Wisecam, and if you guys don't know them, they're like a little device where you have kind of IP cameras. They just got their first tariff bill. They imported $167,000 of smart floodlights, and they paid $255,000 in tariff fees. And many people were saying, hey, you don't believe us? We got receipts here. Here's the receipt right here. Boom. That's the receipt for it. You can kind of see the duty of $255,000. So this is really hitting a lot of companies. The question will be is, what does this look like on the consumer layer? How do American consumers navigate this? I want to go to a clip real quick. This will get into a little bit about how much we're going to see in terms of reduced shipments. We're going to be by a third starting next week. Take a look.
You're really expecting a third of the traffic to drop off next week?
Good morning, Becky. And yes, that's right. According to our own port optimizer, which measures the loadings in Asia, will be down just a little bit over 35% next week compared to last year. And it's a precipitous drop in volume, with a number of major American retailers stopping all shipments from China based on the tariffs. And that makes up about 45% of our business here in Los Angeles, Becky. Now, what we have heard in talking directly to CEOs and senior executives of the shipping lines is they'll try to add a couple of port calls in along the Southeast Asia routes where cargo is still moving, albeit at a 10% tariff. But realistically speaking, until some accord or framework can be reached with China, the volume coming out of there, save a couple of different commodities, will be very light at best.
All right, so that's going to be a bit of a hit on the China's economy. If you look at CNBC's statement right here, U.S. tariff uncertainty is now putting China's Christmas-made products in question. And of course, that will be a big deal because a lot of this is timing right now. If you look at this, if you don't start producing in the next couple of weeks, you're going to start missing Black Friday and Christmas. And remember, you have Prime Day in July, which apparently now is going to already be torpedoed. I don't know how Amazon is going to play into this. Probably we'll find out here very soon. But a lot of this is starting to impact. Let me know in the comments down below, has this impacted your daily life yet? And if it has, let me know how it's impacted you. So just drop some comments down below. Let's go into this right here. Apple is saying that tariffs is now going to cost the company up to $900 million this quarter. Maybe they can take some of the savings that they have been charging and cheating all of these developers and creators and actually apply it toward trying to save their company. We'll see. I'm not a big fan of Apple right now after all this mess that's been going on. Just in, China quietly exempts tariffs on $40 billion worth of goods. Now, why do they need U.S. goods without tariffs? I don't understand. I thought this was a self-sustaining economy over there. So what is $40 billion of U.S. goods not getting tariffed on over there in China? I'm going to have to do some research on that one. Let's take a look at this. Just in, China also says it's not going to engage in extortion or coercion by the United States. This, of course, coming from Brick News. Remember, China is very good at propaganda, and you have to understand how they go about negotiation, just like any country, and I think anybody. They are going to utilize every tool they can, including things like this, out there to try to put more pressure on the Trump administration. Bitcoin hodler now is looking at unrealized profits of near 350%, as maybe this 100K range could risk a little bit of a sell-off. And if you're in profit, would that put you in a position to where you would sell at 100K? Is 100K really the number? Because really that's not even an all-time high. I don't know. I think that might be a little bit overcooked. Order book data suggests that bulls may not succeed in keeping the upside going. That is still a big question mark because there's still a lot of variety here, I think, from a macro side of things. If we do get a rate cut this year, I'm still questioning whether or not we will. That is going to have a lot of impetus on where we're going to see the price of Bitcoin going above the 108. Do we see May become a very active month and possibly kind of that summer lull that typically happens in a lot of traditional finance? All right, so here you have Jeff Bezos, who's filing to sell up to $5 billion worth of Amazon stock. Granted, many people would say, okay, does he know something around, is the market possibly trending down? I think really, as the number one retailer and the most Chinese products being sold across America through Amazon, that's why we're going to see a bit of a hit. And of course, I think he knows that coming in. Now, what does that mean long term? Nobody really knows, but I think the big point you got to look at is follow the unemployment rate. Now, it's remaining at 4.2%. Though this is a formidable unemployment, the fact that it did not go up is a good thing. So when you look at Chair Powell's position, he's trying to retain jobs. And of course, all of that is going to center around how is the effect of inflation, which will be tariff induced most likely, start to push into the job scenario. And that's the key that I'm watching, because the easiest cut for most businesses, when you look at retail businesses, hospitality businesses, it's going to be an immediate impact on jobs. So we could see a rise in unemployment coming on. So is this the calm before the storm going in? I want to play a clip for you guys. This is Morgan Stanley talking about maybe 4 things that could convince you on this rally. Take a look.
We need to see 4 things.
Yeah, so I mean, it's not all 4, but we need to see some combination of these 4 things. I'd say the first one is some deal on tariffs with China.
Okay.
That's the one that matters.
All right, check.
Okay.
We'll
Number
see.
2, dovish Fed.
Okay.
Where they kind of get off the stick. Okay. Number 3, we see rates come down in a more meaningful way, the back end of the market, without growth really deteriorating. Okay. And then the 4th one, which is probably the most important for stocks, is earnings revisions. Earnings revisions have been on a downward trajectory for quite a while, but if that were to turn up, so maybe 1 or 2 of those together, we could see a breakout of this range we've been stuck in.
Does that suggest that you're not yet convinced that this rally back, 8 in a row, I think we're going today on the S&P, is sustainable? Well,
I would say this. The lows could be in. Okay, we priced a lot of damage at 4,800 on April 7th. There was a capitulatory move. I think the wild card now is, are we going to have a recession? Well, that's the only way to define a recession. It's a labor cycle. All this stuff about negative GDP, I don't care about that. I care about, do companies start laying employees off in a way where you get a next round of revisions that become more serious?
All right, so he hit on a lot of the things that will be key, and he did mention not all 4 need to occur. Many of those things, if one of them and others don't, would still be a very good signal for the market. If you get China and the U.S. to come to some sort of terms on tariffs, that'll be a big deal. The EU is already negotiating a 0 for 0. We're starting to see some movement in. Now, remember, you have to actuate these scenarios for this to actually cause movement. And I think that's what Trump has been able to do. I'm not agreeing that the tariffs are a good thing, but I am saying if you are going to use it as a negotiation ploy, you actually have to follow through with it. And I think that's what's happening right now. He's following through so much that it's causing a lot of rough in the administration, and many of his tariffs, many people are now looking at, is this a legal issue that the president might be facing around whether or not it can even be done? Trump also suggested that maybe families should scale back. Let me kind of zoom in on that just so you can get this. I don't know if he actually said that, but I didn't get the quote, but this is what Cointelegraph said, saying that you should just not buy Christmas presents this year. So I'm not sure that's going to go over with too many Americans for sure. Other things, President's power to unilaterally impose tariffs is not rooted in the office of the constitutional Article 2 power. That will be a factor, but I think there's always going to be an argument coming from the White House, even if you look back at how world trade has continued to decline over the years. This is still just another factor I think that's playing into tariffs. Further into it, they're going to show how this all came about in terms of the timeline. But there's some key points I want to get into in the articles right down here at the bottom, right here. The outlook for crypto. It's a peculiarity of tariffs that they apply only to goods and not services or digital goods. So that's the interesting thing around cryptocurrency. So this has left crypto pretty much out of the game in terms of impact, outside the reach of traditional trade barriers. And that, of course, still applies. But it may prove to be the final validation for cryptocurrency, as a lot of people might look at this as the possible international trade use case that has been already used around the world around the use of stablecoins in a lot of diminishing, money out there around a lot of these emerging markets, because it's already starting to see use cases. Maybe the tariffs will start to push that a little bit further. Other things I want to hit on right here, of course, Rand Paul says Trump, he's trying to get this bill co-sponsored. This is a bipartisan bill to strip the tariff powers from Trump and get Congress to come through with it. This, of course, many people are saying, well, this is just, rhino display of what Rand Paul is doing, because he's not necessarily in favor of all these situations that the White House is doing. I want to go to a clip real quick, because this one will go into his whole idea that this is an emergency and this is not the way to run a country. Take a look.
Well, here's the thing is, it's about emergencies. It's about whether we're going to run a country under emergencies. When the previous emergency with Canada and Mexico, they said, oh, it was fentanyl. I don't know, are they alleging that fentanyl is coming from Sweden or Finland or Monaco, or, it's emergency for 80 some odd countries. And through that emergency, then they're instituting a tax, which is a tariff, without the authority of Congress. So I have two objections. One is the emergency, and then there's the economic objection to tariffs. But primarily the debate really is over whether or not you're going to have the power of taxation originate in Congress. This is something, the English fought against the king doing it. They fought for the supremacy of Parliament. And when our founding fathers did this, they said, oh, taxation and the power to destroy is such a power that we fear. We're only going to put that in Congress, and we're going to make sure that all taxes start in the House of Representatives before they go to the Senate. And so to have a president do it unilaterally, even if you like tariffs, it's really a bad way to run a country, because what happens when we get Bernie Sanders or Karl Marx or whoever the Democrats put forward? What if they become president, use emergencies to, say no more gasoline or no more gasoline powered cars, we're going to say tomorrow. So emergencies are not a good way to run a country. You need the separation of powers and the checks and balances to ensure freedom.
All right, so there you have Rand Paul going head to head. Point is that there are some Republicans possibly stepping outside the ranks and pushing on this right now. Of course, his bipartisan measure to undo Trump's global tariffs fails in the Senate right now. And it doesn't mean they're not going to stop here. I think they are still going to continue to go through with this. However, once this tax bill does go through, my anticipation is we will see a lot less push on the tariff side. And all of a sudden, we're going to see deals being made very quickly. That is the thing I'm expecting and predicting going forward. One other thing that Republicans are looking on right now to count on is the tax plan. And of course, this would possibly boost the economy. There is a catch, obviously, that's going to be on the upside for a lot of, the more wealthy individuals, because this will start to apply to where the market itself is going to be driven off of where the economy is going. And of course, that means all these tariffs could have an immediate impact going into a very, very interesting summer and then holiday season. So let's get into the last point I want to hit on right here, and that is that the Senate is looking to push through the Stablecoin Bill before the end of May. This is the good news, because when you look at stablecoins and the idea of trying to diminish the dollar, the idea behind stablecoins, I believe, is really going around that. This extends the use of the US dollar really around the world. And if you consider the EU dollar in the comparison of use, and you look at the size of Tether, Circle, etc., all these countries that are wanting exposure to the dollar, they're now going to be able to get those through stablecoins. This could lower the dollar's value, and that actually might be good because of the ability to export on a more even level with other countries, where the United States has not necessarily been in that place because our dollar is usually much greater in value. So that's the good news. Stablecoins are coming. This will only expand the market, I think, in general, and make crypto much more of a mainstay out there. If you guys are not part of the Diamond Circle, get in right now. It's a great place to get additional content. Also, follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.